Hey, what's up, guys? How you doing? Thank you for tuning in. This is Craig Smith with Craig Trader. Thanks for tuning in again. Today is Tuesday, February the 23rd, 2021. Just wanted to welcome you guys in. As we get started, you can go on and hit that like button, share, subscribe. We enjoy working with each other, and I thank you for you all tuning in the comments and different people signing on to the channel. We're going to have an exciting time continuing to just share on the journey of building wealth. I'm wearing my commemorative red shirt today because that's what the markets have been doing this past week. It's been kind of bleeding off. And as you know, many of y'all's portfolios are down quite a bit, even though the Dow, the S&P 500 may not be down that much percentage wise. We've had some stocks that have really run up over the past few weeks, overheated even in the technology section, the QQQ, and they're beginning to correct and come down some. Well, as you know, if you follow my work, I put out some different tools to use when the market is going down. We will not lose in this market. The work that I do and that I've been doing, I think I've been doing quite well. If you've been following me, I'm going to let you know when things are good. I'm going to let you know when things are bad. And right now, the market has been very volatile, and we're not really sure what's going on other than a correction. I don't think it's an all-in-out crash like a lot of people believe. It's not a crash yet. We're down some percentages. And some of your investments, you may be down quite a bit, as I am also in some of my investments. But what you can do is hedge those investments down on the downside by thinking of that stop loss. On my accounts, I usually use a 20 to 25% stop loss. That way, if any particular stock or security goes down 20-25% max, I sell out. Either I put a trailing stop on it, or I'll put a physical stop, or I'll just go in myself and track it and sell out. The reason for that is if it's rolling down past 25%, you kind of into bull market territory then, and you want to see how much further it may fall without letting your investment go or portfolio go down much further than that. You can always wait, see if it bottoms out, see if it bounces, see if it starts turning and going back up again, and get back into that same investment. That way, you assure yourself of never allowing your stocks, if you're trading your own accounts, to fall down past the 25% mark, and you can get in and have a re-entry point wherever you set it or want it to be at. You know, in the past when we've had different market crashes, you know, the stock market and certain stocks may go down 30, 40, 50, 60, 70%, and you have people that don't control their accounts or don't look at their accounts, and they ride this thing all the way down, where if you could carry it all the way down and say, I'm just going to buy on the dip, buy on the dip, buy on the dip, and there's nothing wrong with that. If that's your investment technique and strategy, that's fine. I'm just saying that's not mine. I would rather not ride it all the way down, because you don't know how long it's going to take to ride that back up again. And since I do this full time, I'm always trying to reshift my portfolio to follow certain momentum and trends so that I can be more on the upside than on the downside. So I know you understand that. The market has been down this week overall. I think the Dow's down like maybe 0.5% or something like that. S&P 500 down maybe 2 to 2.5%, something like that. But some of our investments that have been high flyers are down 20, 25, 30%. Those of us that are trading options, you know, if you write it down, you can be down 50, 60, 70%, while somebody else is down 5%. So you definitely don't want to do that. On a stop loss on my options, it depends. I may let it go down to 30, 35%. Some of them I'll let it go down to 50%, to see if they're going to bounce back that particular day or the next day. But it's up to you. At some point, you have to have a plan and an exit strategy and an entry strategy to manage the risk and manage your investments. So some of the tools we had talked about On the last video, I had shared to track like the silver market. You got SLV, which tracks the silver, SIL, which tracks the silver miners, SDOW, which is 3 times the derivative of going opposite of the Dow market. So if the Dow is going down, then SDOW will actually be going up 3 times the rate. And I'm adding a new one, SPXU, which tracks the adverse or inverse of the S&P 500 by 3. And so if the S&P 500 is falling, say 2%, roughly the SPXU will be going up 6%. This is a great and incredible way to hedge your investment account against risk, down loss. We don't know, like I said, what's going on exactly with the market. No one, not even the best investors and market people, can call tops and bottoms accurately on a consistent basis. So we don't even try to play that game. We just may set parameters, let it fall. If it falls by a certain point, then I'm out. Some people hold their investment and say, well, I'm going to let it ride out, and that's fine. Like I said, whatever your investment strategy is, I'm just letting you guys know that there are more options out there that you may have not known about in the past to help prevent more loss and to help increase your gains. So that's what I feel I'm here for, is to help you in the overall market to increase and build your wealth as fast as possible. We're on this journey together. That's what we're trying to do. Remember, also continue to subscribe, share the comments. Also, on a day-to-day basis, in real time, I let you know of changes that I'm making in the market and in certain stocks and what I'm doing through my free email newsletter. So please go to CRAIGTRADER.com. There's a link below, CRAIGTRADER.com, and then at the top of the page you'll see where you can subscribe to my email newsletter. It's free. The advice I give out is free. Maybe I'll start charging one day for some of this stuff. I don't know. It's worth it. But for right now, you can take advantage of it for free. Drop your email address in that CRAIGTRADER.com slot for the free email newsletter, and I'll let you know real time, day to day, what I'm doing and what kind of changes I'm making. So remember to write these things down. Keep track of what's going on in your portfolio, so you know pretty much exactly how much you're up, how much you're down. And you want to track these things so that you can be successful at investing. Now, I did add a couple of buys in my portfolio this week. I've done some shifting and some changing, and like I said, if you're part of the email subscription, then you'll know what I'm doing on a real-term basis. Sometimes I'm in and out of things, but I did want to let you know about that. And that is, even if I don't put it on the email, if you follow what I do, and your investments fall 25%, I'm just out of them. So even I may show you a buy that I've done, or a buy into a particular stock or ETF, and maybe I didn't come back and say I sold out of it right away. Well, you know, pretty much if it hit 25%, I'm out of it, and then I'm looking for a re-entry point at some point, and then I'll usually let you know about that too. So 3 particular stocks that I've added to my portfolio. Oh, also on these SDOW, SPXU, I want to let you know in silver, I usually have about 10% of my portfolio in those things. You can arrange them however you want to. I usually have about 10%. If it looks like the market is starting to go down even more, I may increase that amount to 20, even 25% of the portfolio, depending on how volatile and how bad the market is. Also, those of you that subscribe to the email newsletter, I will have a bonus that I'm going to be giving out, sending out to the subscribers also, and I'll let you guys know on the next video about it also. Also, these are what I added this week. It is Cleveland Cliffs, CLF, Halliburton, HAL, and then ticker symbol OIL, which is the oil ETN or ETF, which tracks oil. The energy market has been heated up and has been really going up quite a bit lately. while the market has been going down. So also this can be some form of a hedge, because the energy market has been increasing. And so you can always put in, I have about 5% to 10% right now of my portfolio in the energy market also. So just letting you guys know about that. I'll keep you on top of updates. So I just wanted to again thank you all for subscribing. Thank you guys for commenting. Oh, my birthday was this past week, so happy birthday to me. I thank you guys, and Jean Philip Montant, thank you for sending in. I had it posted on my Facebook page, and he sent me a nice little gift on my Cash App. So I appreciate you guys. Remember, you can't win the game if you're not in the game. Get in the game, play to win, and I will see you guys later. Have a great day.